All right, we got some big news for Adobe stock investors as the company's management team reported a quarter that exceeded expectations both on the top and bottom line, and the company reported remaining performance obligations that exceeded its revenue growth. That's a key indicator I like to look out for companies that have this metric where they generate remaining performance obligations because they sign long-term contracts with customers. So I'm going to share those details with you in this video. All right, so Adobe's management team said that they exited the quarter with remaining performance obligations of 20.44 billion, and that was up 13% year over year. Now, that was ahead of the company's revenue growth rate, which was around 10% year over year. And the reason why I like to look for companies that generate remaining performance obligations ahead of revenue growth, because remaining performance obligations are contracts that a company signs with its customers for long-term deals, and these eventually turn into revenue. So if a company is generating remaining performance obligations growth that's ahead of revenue growth, that signals a growing demand for a company's products and services, or an increasing rate of increase, a second derivative that's likely to increase. And that means that there's organic demand in the market for a company's products, that there's reasons and causes that's creating demand for the company's products and services to increase. And I always like to see that. Of course, I devote an entire chapter in my book on the customer value proposition because I see it as an integral part for investor success. When a business offers a good value to their customers, it's very likely that they're going to sustain revenue and sustain revenue growth and maintain competitive advantages. And this is one sign that a company has a great customer value proposition. Adobe's management team also said that their cash flow from operations in the quarter was a record at 2.2 billion, and their ending short-term investment position ending Q3 was 5.94 billion. So they have an excellent balance sheet and they generate over $2 billion in cash flow every quarter. Now, I've suggested that the management team should increase their investments in research and development to create products and services that allow Adobe to maintain its competitive position in a rapidly changing technological environment with artificial intelligence disrupting many industries. Still, the company is spending a lot of money buying back stock, which I usually see as a good sign because that signals that the management team believes their shares are undervalued. Click the link below to watch the full video.